Welcome to Independent Wealth Planner Strategies with Jennifer Lang, helping pre-retirees and retirees build, preserve, and protect their financial assets in today's volatile market.
Welcome to today's webinar. I'm Mike Payne, and your host for today is Jennifer Lang. Jennifer is an author, a speaker, and a licensed financial services professional who found her love for financial literacy the hard way. Her career goals were on track as she tackled the hustle and bustle of working in New York City as a corporate manager. That is, until life threw her a curveball that would change her direction. Her mother became ill, and Jennifer only had one choice. She left New York and became her mother's full-time caregiver. It was during this 10-year period that Jennifer learned firsthand the importance of how life insurance protects an individual and a family while they are alive, as well as how having long-term care benefits in place can empower family members and relieve burdens. She found a new passion and purpose to help the underserved middle class protect against the emotional, physical, and financial stresses of caring for their loved ones. Currently, she works with businesses and families in all 50 states to acquire business loans, life insurance, and annuities. She is contracted through One Resource Group, and you can contact her through her website, JenniferLangFinancialServices.com. So, without further ado, Jennifer, take it away.
Thanks, Mike. I'd like to welcome and thank everyone for attending today. My name's Jennifer Lang, and this webinar is being recorded and will be available for rebroadcast later on. So please submit all questions via our website, JenniferLangFinancialServices.com. The chat is open, so tell me your name and where you're from, and I'll get to questions as time allows. I see some names in the chat box already. Hi, Patrick from Utah. Good to see you. Linda from Washington. Good to see you too. I see Eric from Michigan. Glad you made it. Well, thank all of you for joining. Today's webinar is entitled Protecting Those Who Matter Most. And as Mike mentioned, a person can either learn things the easy way or they can learn things the hard way. And in my case, when my mom got sick, I learned the hard way. I, like most people, thought that life insurance was just something you had in order to pay for a funeral. I didn't know that it was such a powerful wealth accumulation and protection vehicle. So I do these webinars and I speak to businesses and organizations because I want to help as many people as I can reach their hopes and dreams and avoid that financial learning curve that I went through. So let's jump in. Life insurance has the potential to offer protection at a crucial time for those who matter the most to us. However, life insurance needs are different at different times in life. During working years, life insurance may be able to help your loved ones avoid drastic changes in lifestyle in the event of your passing. During retirement, life insurance can be positioned to offer additional tax and estate benefits. Regardless of your life stage, consider reviewing your life insurance needs annually to account for changes in your family situation. At JenniferLangFinancialServices.com, we provide a wide range of services with the primary commitment of helping our clients pursue their unique financial objectives. We want to help you develop an overall strategy tailored to your goals and time horizon. JenniferLangFinancialServices.com is dedicated to helping individuals evaluate their financial situations. We want to provide people with tools that can help them make informed decisions. We offer informational material on a wide range of topics because we understand that individuals have diverse financial needs. And if you have any questions or concerns during the course of this presentation, we invite you to take advantage of our complimentary consultation. During the consultation, we can discuss your questions and begin the process of helping you develop a financial approach that will address your individual needs. Keep in mind that the information in this material is not intended as tax or legal advice. It may not be used for the purpose of avoiding any federal tax penalties. Please consult a professional for specific information regarding your individual situation. About 50 million households, that's roughly 40%, say they need more life insurance. And the numbers bear this out. In 2007, 10.5 million individual life insurance policies were issued. In 2017, only 10.5 million policies were issued. This lack of increase in the number of policies may have many causes, but the result is fewer families have the protection of life insurance. One reason may be that people vastly overestimate the cost of life insurance, believing on average that it costs 3 times as much as it actually does. Several factors will affect the cost and availability of life insurance, including age, health, the type, and the amount of insurance purchased. Life insurance policies have expenses, including mortality and other charges. Now, if a policy is surrendered prematurely, the policyholder also may pay surrender charges and have income tax implications. You should consider determining whether you are insurable before implementing a strategy involving life insurance. Any guarantees associated with a policy are dependent on the ability of the issuing insurance company to continue making claim payments. It's easy to view life insurance as an obligation rather than an opportunity, and an obligation that can be put off at that. But life insurance offers many benefits. And we all know life insurance can provide funds to pay for your final expenses, including estate taxes and other costs. However, life insurance potentially may be able to replace your income and help to maintain your family's standard of living after you pass away. In addition, life insurance may be able to protect your family's home by paying off the mortgage and other debts. The proceeds of a life insurance policy can be used to pay others to do some of the tasks you do routinely, such as caring for an aging relative or a child. Life insurance has the potential to ensure that your children or grandchildren have the funds to go to college. Life insurance also can provide supplemental retirement income for your spouse or partner. A life insurance policy may be able to provide funds to help settle your estate, to equalize otherwise unequal gifts to children, for example. And life insurance can be used to pay expenses incurred to keep your small business in the family. To understand life insurance, you need to understand the answers to 3 questions. First, how does it work? How does life insurance function step by step? Second, how much do you need? How much insurance coverage will it take to meet your obligations? And third, what are your life insurance options? Let's look at the first question. How does life insurance work? Well, life insurance is a contract between you and an insurance company. Under this arrangement, the insurance company agrees to pay your beneficiaries a specific amount of money when you die. In return, you agree to pay a premium, either as regular payments or as a lump sum. Remember, any guarantees associated with a policy are dependent on the ability of the issuing insurance company to continue making claim payments. The insurance companies have developed a number of variations on this arrangement, but it forms the basis of all insurance policies. Next, let's look at how much life insurance do you need. There are general estimates available based on multiples of income. However, if you are looking for a more accurate estimate, consider completing a DNA test. A DNA test is a detailed needs analysis that takes into account a wide range of financial commitments to help better estimate insurance needs. The first step is to add up needs and obligations. Start with your family's short-term needs. How much will it cost to cover your final expenses, such as a funeral, final medical bills, and any outstanding debts, such as credit cards or personal loans? Next, look at your family's long-term needs. How much will it cost to maintain your family's standard of living? How much is spent on necessities like housing, food, and clothing? Also consider factoring in expenses such as travel and entertainment. Answering the question, What would it cost a year to maintain this lifestyle is a good place to start. Finally, look at your family's future obligations. Will aging parents need some kind of support? Will children or grandchildren need help with college costs, and so on? The following video gives us a recap of a detailed needs analysis.
According to one annual study, 41% of U.S. households have no life insurance. If you have a family that relies on your income, it's critical to know what their needs would be in the event of your death. To get a better idea, take a DNA test or detailed needs analysis. A DNA test looks at your needs and obligations and then subtracts your liquid assets. Short term, how much cash will it take to cover funeral expenses, final medical bills, and any outstanding debts, such as credit cards? Longer term, what will it cost your family to maintain its current lifestyle? Consider housing, food, clothing, and extras like travel and entertainment. Next, add up potential obligations. What new commitments may come in the future? These can include college funding and caring for aging parents. Take all of these costs and subtract your current liquid assets, the money you can get to right away, and you may get an idea about the amount of life insurance coverage you might need. If something happens to you, do you want the people you love to be protected? It may be time for a DNA test. Give us a call and schedule a review today.
So when you are preparing your detailed needs analysis, start by taking a hard look at your family's liquid assets. Liquid assets are assets that can be redeemed quickly and for a predictable price. Generally, houses and cars are not considered liquid assets, since they may require time to sell and because selling them may adjust your family's standard of living. Needs and obligations minus liquid assets can help you arrive at a better idea about the amount of life insurance coverage you may need. Keep in mind that this is just a quick exercise. While it's a good start at understanding your insurance needs, a more detailed review may be necessary to better assess your situation. Now, all life insurance products fall under one of two broad types: term life insurance and permanent life insurance. Term insurance is the simplest form of life insurance. It allows policyholders to purchase coverage for a specific period of time at a specific price. Term insurance is normally less expensive than permanent insurance, and permanent insurance does not expire. It remains in place as long as premiums are paid. When individuals purchase term life insurance, they pay a specific premium to buy life insurance coverage for a specific period. For example, 10-year term or 20-year term. Okay? If the policyholder dies during that time, his or her beneficiaries receive the benefit from the policy. If he or she outlives the term of the policy, it is no longer in effect. The person would have to reapply to reinstate the coverage. Unlike permanent insurance, term insurance only pays a death benefit. That's one of the reasons term insurance tends to be less expensive than permanent insurance. There are four broad types of permanent life insurance. The first of these is whole life insurance. Whole life insurance is life insurance that remains in force for the policyholder's whole life as long as he or she remains current paying premiums. In exchange for these fixed premiums, the insurance company promises to pay a set benefit or the face amount when the policyholder dies. Unlike term life insurance policies, whole life insurance policies build up cash value, effectively a cash reserve that pays a modest rate of return. The growth on this cash value is tax deferred. With whole life insurance, withdrawals of earnings are fully taxable at ordinary income tax rates. If you are under age 59 and a half when you make the withdrawal, you may be subject to surrender charges and assessed a 10% federal income tax penalty. Also, withdrawals will reduce the benefits and value of the contract. On the other hand, taking out a loan against your whole life insurance policy does not count as taxable income, according to the IRS. However, if you surrender your policy or your policy lapses, the loan becomes a taxable event. The IRS is notified and you have to pay tax on the loan plus interest at your regular income tax rate. While repaying a loan isn't mandatory, any debt outstanding upon the insured's death will be deducted from the face amount of the policy paid out to the beneficiaries. Universal life insurance is permanent life insurance that goes one step further than whole life insurance. It provides a flexible premium and, by extension, a flexible benefit. That means that, within certain limits, the policyholder decides how much to put in above a set minimum. This potentially raises the face value of the policy. Like whole life insurance policies, universal life insurance policies accumulate cash value, and cash value that grows tax deferred. Variable universal life insurance is a form of universal life insurance. It is permanent insurance that provides a flexible premium and an adjustable benefit, meaning the policyholder decides how much to put in above a set minimum, potentially increasing the face value of the policy. But there is an important difference. With a variable universal life insurance policy, the policyholder directs how premiums are invested by allocating them to one or more investment subaccounts. Depending on the policy, these subaccounts could include a fixed interest option, as well as various stock, bond, or money market choices. This provides access to the potentially higher returns provided by the financial markets. It also means returns could underperform those provided by other life insurance products. Variable universal life insurance combines the protection and tax efficiencies of life insurance with the investment potential of a comprehensive selection of variable investment options. The insurance component provides the death benefit coverage, and the variable component gives you the flexibility to potentially increase the policy's cash value. Variable insurance products are subject to investment risk, are not guaranteed, and will fluctuate in value. In addition, there is no guarantee that any variable investment option will meet its stated objective. Variable life insurance is sold by prospectus only. Investors should consider the investment objectives, risks, charges, and expenses of the variable insurance contract and subaccounts carefully before investing. The prospectus contains this and other information about the variable insurance contract and subaccounts. You can obtain contract and underlying subaccount prospectuses from your financial representative. Please read the prospectus carefully before you invest or send money and assess your needs for death benefit coverage. Also, please remember that money held in money market funds is not insured or guaranteed by the Federal Deposit Insurance Corporation or any other government agency. Money market funds seek to preserve the value of your investment at $1 a share. However, it is possible to lose money by investing in a money market fund. So that raises an interesting question. Should you choose a fixed or variable policy? A fixed policy offers a guaranteed fixed return. It's dependable, though more conservative. A variable policy offers some degree of investment flexibility. The policyholder allocates his or her premiums to different investment subaccounts. This gives the policyholder access to the potentially higher returns provided by the financial markets. It also means there is a risk of lower return. So whether you choose a fixed or variable policy will depend on your individual situation. You'll need to take into account your complete finances, including your cash reserves, your investment portfolio, and any business interests. Any guarantees associated with the policy are dependent on the ability of the issuing insurance company to continue making claim payments. Permanent life insurance policies also offer an additional benefit, access to the cash value of the policy. And as I mentioned before, policyholders can usually borrow a portion of their policy's cash value under fairly favorable terms, and interest payments on policy loans go directly back into your policy's cash value. Generally, loans taken from a policy will be free of current income taxes provided certain conditions are met, such as the policy does not lapse or mature. Keep in mind that loans and withdrawals reduce the policy's cash value and death benefit. Loans also may increase the possibility that the policy may lapse. If the policy lapses, matures, or is surrendered, the loan balance would be considered a distribution and would be taxable. Withdrawals of earnings are fully taxable at ordinary income tax rates. If you are under age 59 and a half when you make the withdrawal, you may be subject to surrender charges and assessed a 10% federal income tax penalty. Life insurance is not FDIC insured. It is not insured by any federal government agency or bank or savings association. It is a guaranteed contract through the life insurance company. Life insurance offers protection in case you die when those who depend on you still need you. It also offers other estate and tax management benefits. Here are some scenarios that might be familiar. Anthony and Selena have a growing family and wonder, with all of our expenses, including saving for college and investing money for the future, is life insurance really necessary? How do we choose between a permanent or a term life insurance policy? Dave and Christine are in retirement, and they ask, now that we are retired, should we cash out our whole life policy? Rebecca is a single woman with a small business, and she wants to know, what are the criteria for understanding whether key man life insurance is appropriate? Isaac likes to do research online and has read some negative comments about universal life insurance. And he asks, do the benefits of a universal life insurance policy outweigh the fees and expenses associated with it? All of these are great questions, and it's important to remember that individual recommendations will vary with each situation. This final video gives us a recap.
We've all heard the saying that the only sure things in life are death and taxes. And no matter how painful it is, over 137 million of us manage to get our tax return in the mail by April 15th every year. Why? Because Uncle Sam may impose hefty penalties if we don't. But what about that other sure thing? Though we don't like to think about it, all of us will make an exit sometime. And those we love may suffer if we are not prepared. 85% of us agree that most people need life insurance, and 20% of Americans say they need more life insurance than they currently have. When a household loses an income, life insurance may provide estate liquidity, help cover expenses, and potentially meet the income shortfall that may occur. Life insurance. It's something most of us intend to take care of, but it is easy to put off. If the only sure things are death and taxes, be prepared for both. Call today and let's take a fresh look at your needs.
As you might imagine, there are a number of considerations you should bear in mind when considering life insurance coverage. You really need the assistance of an expert, and that's where we come in. At JenniferLangFinancialServices.com, we specialize in helping people just like you assess their needs and put policies into place to meet those needs. Take advantage of our resources and schedule a complimentary consultation today. We'll thank everyone for attending. Until next time! Have you ever walked into a store and had a salesperson try to sell you something that didn't quite fit? Just because that's what they had in stock? Well, when you buy life insurance directly from an insurance company or from an agent who only represents one company, you can only get what they have to offer. You're buying life insurance right off the rack. Here's a better idea. Contact JenniferLangFinancialServices.com. We're an independent agency and we represent many insurance companies, so we can find life insurance that is the right fit for you and at a price that fits you too. Log on to JenniferLangFinancialServices.com. At JenniferLangFinancialServices.com, we find great insurance quotes.